Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about APTIV PLC annual report. APTIV PLC offers a diverse range of businesses and services to the automotive and commercial vehicle markets worldwide. The company operates through two primary segments: Signal and Power Solutions and Advanced Safety and User Experience. The Signal and Power Solutions segment provides critical components for vehicles' electrical architecture, including engineered component products, connectors, wiring assemblies and harnesses, cable management products, electrical centers, and high-voltage and safety distribution systems. These products enable the efficient transmission of power and signals within vehicles. In contrast, the Advanced Safety and User Experience segment focuses on providing technologies and services that enhance vehicle safety, security, comfort, and convenience. This includes sensing and perception systems, electronic control units, multi-domain controllers, vehicle connectivity systems, cloud-native software platforms, application software, autonomous driving technologies, and end-to-end DevOps tools. Overall, APTIV PLC's offerings encompass a broad spectrum of products and services that cater to the evolving needs of the automotive industry. APTIV PLC's stock price has experienced a significant increase of over 28.52% in the past year, driven by a series of positive financial results and strategic corporate announcements. The company's strong earnings reports have been a major contributor to this growth, with record-breaking revenue and adjusted earnings per share (EPS) reported in each quarter. In May 2025, APTIV announced its first quarter earnings, which included a record adjusted EPS of $1.69. This was followed by the second quarter earnings report in July 2025, where the company revealed plans to spin off its electrical distribution systems (EDS) business and reported record revenue and operating income. The third quarter saw APTIV continue its strong performance with record financial results, including a 7% increase in revenues and adjusted EPS reaching $2.17. The company also raised its full-year guidance during this period. In January 2026, Piper Sandler upgraded APTIV's stock to overweight from neutral, further boosting investor confidence. The final quarter of 2025 saw APTIV report record-breaking revenue and adjusted EPS, exceeding analyst expectations. The company confirmed the spin-off of its EDS business, which is expected to include a significant spin dividend of approximately $1.6 billion. This strategic move has contributed significantly to the upward trajectory of APTIV PLC's stock price over the past year. Overall, the combination of consistent positive earnings reports and strategic corporate actions has driven the increase in APTIV PLC's stock price. As the company continues to deliver strong financial results and execute its growth strategy, investors remain optimistic about its future prospects. The net income of APTIV experienced a significant decline between 2023 and 2025. In 2023, the company reported a net income of $2,966 million, but this dropped by 39% to $1,810 million in 2024. The decline continued in 2025, with a staggering 90% drop to just $181 million. This sharp decrease is largely attributed to goodwill impairment, restructuring and separation costs, asset impairments, and compensation expenses related to acquisitions. Profit margins also underwent significant changes during this period. In 2023, the operating income margin was 7.8%, but it increased by 19% to 9.3% in 2024. However, this improvement was short-lived, as the margin dropped by 37% to 5.8% in 2025. The net income margin followed a similar trend, decreasing from 14.8% in 2023 to 0.9% in 2025. The decline in net income and profit margins can be attributed to various factors, including goodwill impairment, restructuring costs, asset impairments, and compensation expenses related to acquisitions. Additionally, specific events such as the loss on debt extinguishment in 2024 and interest and penalties relating to unrecognized tax benefits in 2025 further contributed to the decline. The company's financial performance indicates a consistent generation of positive operating cash flow. According to the data provided on page 62, the net cash provided by operating activities for both 2025 and 2024 was substantial, with $2,185 million in 2025 and $2,446 million in 2024. This trend is further confirmed on pages 76 and 173, which also show that the company is generating positive operating cash flow. The company's debt level has undergone significant fluctuations over the years. Initially, it decreased by $801 million on page 75 and further reduced to $7,551 million from $8,352 million on pages 114 and 156. However, a notable increase of $153 million was observed on page 153. The most striking change occurred as of December 31, 2025, where the debt level dropped to €0 million from $450 million in 2024. Regarding interest expenses, there have been mixed trends. On pages 47 and 49, a decrease of $24 million, minus 6.9% and 6.7%, respectively, was reported for 2025 compared to 2024. Conversely, on page 73, an increase of plus 8% in interest expenses from 2024 to 2025 was noted. Additionally, the company incurred losses on debt extinguishment totaling $13 million, $11 million, and $2 million due to the bridge credit agreement and term loan A, respectively. The automotive industry has shown mixed results across various regions and segments. On the positive side, Asia-Pacific is identified as a key market for long-term growth, while China has consistently reported a 10% increase in vehicle production. In terms of segments, market-driven products have benefited from growing demand for safety, electrification, and digitalization features. However, other regions have struggled. North America and Europe have both seen declines in vehicle production, with North America experiencing a 2% decline and Europe a 1% decline. On the segment side, electrical distribution systems have reported poor performance due to separation costs related to a spin-off. These results highlight the need for companies to adapt to changing market trends and regional demands in order to stay competitive. Aptiv's management is signaling a shift towards operational efficiency and strategic investment. The company is undergoing restructuring efforts, consolidating business operations, and planning site exits to optimize its global salaried workforce and reduce its physical footprint. This suggests that Aptiv is streamlining its operations to improve profitability. At the same time, Aptiv is investing in affiliates such as Motional and Stradvision, which has resulted in significant gains for the company. This indicates a focus on strategic partnerships and innovation-driven growth. Additionally, the company's strong financial position, with access to $1.35 billion in senior secured credit facilities, provides a solid foundation for future investments. Overall, Aptiv's management is positioning the company for long-term success by balancing operational efficiency with strategic investment and innovation. The company's focus on optimizing its operations and investing in affiliates suggests a commitment to driving growth and improving profitability. Aptiv's acquisitions and divestitures overview. In recent years, Aptiv has made significant moves through acquisitions and divestitures to shape its business landscape. On the acquisition front, the company has expanded its portfolio with notable purchases. In 2022, Aptiv acquired Wind River Systems, Inc., a leading provider of automotive software solutions. Additionally, it formed a joint venture with Hyundai Motor Group to establish Motional AD LLC, a pioneering autonomous driving technology company. Aptiv also acquired an 85% stake in Intercable Automotive Solutions, SRL, in 2022, further solidifying its presence in the automotive industry. These strategic acquisitions have enabled Aptiv to enhance its capabilities and expand its offerings. On the divestiture side, Aptiv has taken steps to streamline its operations and focus on core areas of growth. In May 2025, it reduced its common equity interest in Motional from 50% to approximately 13%. Furthermore, by April 1, 2026, Aptiv plans to separate its electrical distribution systems business into an independent, publicly traded company called Versagent. This move aims to unlock value and create a more focused entity. Aptiv has also divested its entire interest in the Russian subsidiary to JSC Samara Cables Company for a nominal amount. Moreover, it liquidated a foreign subsidiary, resulting in foreign currency translation adjustments. The sale of Aptiv's investment in TT Tech Auto is another notable divestiture. These strategic decisions demonstrate Aptiv's commitment to optimizing its portfolio and allocating resources efficiently. The company has demonstrated its commitment to returning value to shareholders through both dividends and share buybacks. In terms of dividends, the company paid out $5 million in 2023, increasing to $12 million in 2024 and reaching $20 million by 2025. This consistent payout indicates a strong financial position and a willingness to reward investors. In addition to dividend payments, the company has also implemented an authorized share repurchase program of up to $5 billion. In 2023, it bought back 4.7 million shares for $398 million, followed by 13.6 million shares for $1.1 billion in 2024. The company continued this trend in 2025, purchasing 17.7 million shares through ASR agreements and an additional 5.1 million shares on the open market. Concerns about inventory buildup and supply chain disruptions are evident in various sections of the report. On page 5, increased inventory levels due to global uncertainties and inflationary pressures are mentioned. Similarly, on pages 8 and 43, it is noted that inventory levels have substantially increased from customary levels due to production volatility and cancellations. Global supply chain disruptions have also been a concern in the past, particularly in the automotive industry, page 8. The conflict between Ukraine and Russia has disrupted raw materials supply, including copper, aluminum, palladium, and neon gases, page 22, leading to increased logistics costs and longer transit times. This could potentially impact future production, page 42. The financial implications of these disruptions are also evident, with labor strikes impacting cash flows and profitability, page 21. The report highlights the need for companies to be prepared for potential supply chain disruptions and inventory buildup, which can have significant consequences on their business operations. That concludes the financial summary for APTIV PLC. Feel free to comment below, and I will be happy to answer them when possible.